Anyways, let's start out here. I'm going to go to our major market indexes. I'm using let's see here. Can everybody see the Amex up there? Chris, Dr. K, what can you see? You see Amex up there? How about NASDAQ 100?
Yeah, actually it's just flipping through very quickly now. I see NASDAQ
Composite. Does everybody see the NASDAQ Composite yet?
I'm still seeing NASDAQ 100. Now NASDAQ Composite. Yeah, it's a few seconds delayed.
Okay, everybody sees a NASDAQ Composite. I'm trying to find the questions are, where are they? Yep, coming through, yep. All right, everybody sees a NASDAQ Composite. All right. So what's going on with the market? The market today was up again on expanding volume. The volume was picking up actually this morning as we sold off as the news came out about Iranian warships coming into the Suez Canal, and you saw oil, interestingly, was up a little bit, but oil's been in a downtrend for a while, and it just kind of blipped up today. The market came off a little bit intraday and then turned around and went higher. For the most part, we see volume picking up, and the index is just making a new high. Now, some people might start to see an ascending wedge in here. And if you can see this, let's see here. You can see this in here, kind of an ascending wedge that people might think is a bearish pattern. Everybody can see that? Okay. And so I wouldn't really pay too much attention to this because I think people will try and predict a top based on a pattern that they're seeing, and it really isn't going to hold true. Up here you had an ascending wedge back in here, and of course the market backed off a little bit and then turned and went to new highs. So why is it a bearish pattern? Supposedly it's a bearish pattern because it's showing something that's kind of wedging, I guess, to the upside, and if you break through the bottom of the trend line here on the lower side, it's supposed to be a bearish move. Now, of course, that happened here, but the market just kind of sets up again and then just moves higher, and you set up again in another one. So people are going to try and pick a top here. I don't really see that happening. So you basically are still...
Statistically, these wedges have some validity, but that said, if a certain wedge, say, results in a lower move 60 or 70% of the time, that still means that a wedge will not result in a lower move 30 to 40% of the time, as one rough example. And in the market we're in today, this quantitative easing environment, I think a lot of these patterns just don't work or don't have the reliability of prior markets.
So I want to go to USO, which I think is interesting. Everybody see the USO chart? Give it a few seconds to come up. Not sure what's wrong. It might be the GoToWebinar server, but we noticed there's been a delay with the charts. As soon as it comes up, let me know when you see USO. Okay, United States Oil. This is basically the oil ETF. And you notice that oil has been in a downtrend over the past 3 to 4 weeks since the end of January. You had a little rally up, and now it's starting to come down. Today, with the news that Iran has warships going into the Suez Canal, which is a major thoroughfare for oil shipping, oil didn't really do very much. And oil looks to me like it's trying to find support at its 200-day moving average, but this may just come lower. And what is that telling you about the market? If you look at precious metals, so let me know when SLV comes up, please. You look at silver, for example. Silver is setting up in a little cup here with a couple of little handles. So you see a couple of little handles on the right side here, and it seems to me that it's going to try and come out of here. Now, this seems to make sense with the Obama budget with a $1.6 trillion budget deficit, which is 4 times what George Bush ever did in 1 year. And it's pretty astounding when he's looking at doubling the national debt in 5 years and tripling it in 10. And what does this mean for the dollar? Well, I think if you look at this, I'm bringing up the UUP now, so let me know when you see that. And also thanks to everybody who's throwing up the IMs there, letting us know. So we definitely need that help today, and hopefully we'll have this straightened out the next time we do a webinar. But if you look at the dollar, it rolled over today. So I think part of that is the Obama administration, the Democratic side of Congress, and even some of the entrenched Republicans, the establishment Republicans, don't really seem to be in the mood to really cut spending to the point where you're not going to be having these ridiculous deficits. And so the dollar here rolls over again, and it's bumping, it's actually below both the 50-day and the 200-day. So you've got dollar weak, SLV is moving up. Just came up. Boy, that's fast. But you see what the dollar is doing here. And the dollar's weak. So the dollar, it looks to me like the dollar is going to try and go lower. Now, what does that do? It probably drives the market higher. If we look at gold, GLD just came up, everybody says, so that's coming in. So maybe we're getting a little faster now. You can see GLD is not up as high as silver, but it's just in a big consolidation. But still, you have this trend, and what we see going on, if the dollar is continuing lower, chances are the stocks are going to go higher. Dr. K, you got anything to chime in on that?
Yeah, I would add that GLD is sort of a compressed version of SLV. Silver is going to be more volatile. So to the upside, you're going to make more on it. To the downside, you're going to lose more. And in this environment of quantitative easing and with the Obama budget, a projected budget and all, the commodities in general, it's a great bull market for commodities. The commodities continue their uptrend. If you look at the Commodity Research Bureau Index, CRB, then you'll see that it's had a pronounced uptrend since its lows in early 2009, where it then got back on its feet, meandered around a bit, and then in late 2010, it's been on a very nice uptrend once again. So it looks to me like, based on the environment we're in, I wouldn't be surprised to see commodities as a basket continue to trend higher, and perhaps a whole lot higher.
Hopefully everybody's able to see the JJS or the IPATH, DJUBS soft commodities chart, and you can see this actually had a pocket pivot type move today as it gapped up, and it's been just making continuous highs. So the argument for commodities and probably stocks moving higher, unless there's some disconnect that occurs with the dollar and with treasuries, and maybe there's an auction that goes bad, but you don't know for sure. And for now, what it appears to be happening is you basically have this QE force that's just going to continuously drive the market higher. And it seems that whenever the market comes off, even just a bit, there's a bid hanging out under there, and it just seems to bring it up. So until we see some real evidence that this market's getting into trouble, you have to stay on the long side of this market for the most part. Otherwise, you're just going to get ground up and get turned into so much gravel by this upside run. So what we want to do now is look at some of the stocks. One of the most exciting, for me at least, has been Netflix. Let me know when everybody sees that up there. probably going to take a little bit, but everybody knows Netflix gapped up at the end of January, and then it had another gap up on Monday. It looks a little bit climaxy here, but it's really not a climax top. It's way too early for this to be a climax top. As you notice, you'll see the stock's it had the gap up on Monday. Everybody gets excited. The volume was pretty good. And you see that the stock's kind of coming in here. You had a little outside day. And I could see it coming down into the 10-day moving average. But if you own Netflix right now, there's really no reason to sell it. I own it. And as far as a core position goes, I'm just probably going to sit with that as long as I can. I think one of the things about Netflix is everybody still wants to talk it down. And the Wall Street Journal today on the Street was still questioning the valuation and the capitalization of Netflix. So I think as long as that continues to happen, I think this thing will probably go top. This wouldn't be a climax top because you're not up 7 out of 8 days in a row. You haven't had the largest one-day price move in the stock. So I think it's way too early. The entry point here would be the 10-day moving average is what I would be looking at if you were trying to get on, say, add to your position. Dr. K, how would you handle this?
Well, my first buy point, let's say, well, basically that gap up was a buyable gap up. And then from that point on, we had a pocket pivot on, let me see here, that's on the 11th. Although you could argue that's a little extended. I would say I would wait for the next pocket pivot to add to my position on that gap that I bought initially on that gap up day.
So then you'd be looking for something.
Have patience. Don't chase the stock. There are other viable stocks that can be bought in this uptrending environment, and it might take a few weeks for Netflix to issue another pocket pivot, and that's fine.
Okay, we have BIDU up there. Everybody see BIDU? Good. Maybe it might be the GoToWebinar server. Not sure. We're going to have to check with them. It seems to be pretty broad-based. But in any case, they have BIDU up here, and it's had a nice move. Notice the volume drying up down here in the lower right. And you'll notice the stock's just tracking very tight sideways. I own BIDU too, and it's doing what it needs to be doing. Again, the only way to buy this is if it's coming sideways and the 10-day, which is the pink moving average on the chart, catches up to the price, and you get some sort of reference point off of which to have a pocket pivot or some other sort of buy point. You've still got a company here, 177% in the most recent quarterly earnings. You can see up in the data portion of the chart on the upper half. And that's actually accelerating versus the prior 2 quarters. Next quarter, 118%. So you still have a lot of the earnings power here to push these stocks higher. And the way I see it, in this market, you could almost buy BIDU and Netflix and pretty much go to sleep. I've been trying to do that, but there's always so many goodies out there that catch your attention. But, you could just sit with these 2 stocks, put 100% in each, go 200% long, and let it ride. Pedal to the metal, and I think these things probably go higher as long as the market goes higher. And I know a lot of people.
The nice thing about these leading stocks is that
we'll get to JDSU.
You
those.
You can buy these number of times on the way up. So you could buy, say, a starter position of 25%, and then it allows you to buy a second time. Now you're sitting on a 50% position, and actually it would be more than 50% because the idea is that your second buy is priced higher than your first purchase. So you might have a 60% position in one stock just on the basis of 2 purchases. And then a truly leading stock, before you have to sell any of it, you might get a third buy point as well as it continues higher. And in a good trending market, that's where Bill O'Neill and Gil and some other notable investors make a lot of their money when they hit the right ones. I'd prefer to spread my risk around into many names. But that said, I've had my moments where I've been very top heavy and maybe just a handful of 2 or 3 names that made all the difference.
Somebody asking me, no 65-day moving average? All right, I'll put it on. Some people were getting confused by it last time, so we'll add a moving average here. Give me just a second here. Let's go with the 65. And you can see the 65-day moving average on CMG now. Is that up there, guys? Nice software. HGS they make a good product, I think, for the price, $599 a year, and it's an aftermarket download. But for what you need, if you're your average retail investor, individual investor, and you don't have a lot of money to splurge on toys like I do, because I think I have everything under the sun, this really is helpful. And you have e-signal on the side for your real-time charts, and I think you're okay. Also, they have a lot of great ways to view the market and screen it. But CMG, this is the kind of stock that's drive you batty. I saw this thing trade after hours. It went to 279 on earnings, and then the next morning is all the way back down to around 243 and hits the 10-day moving average and then breaks out. So here we go. This thing's up, but it's drifting back in. Volume was picking up a little bit today. You can see on today's volume bar down at the bottom right that the volume picked up a little bit. So my guess is you're probably going to see this thing come into the 10 days. So I'd be looking for it somewhere between somewhere around 258, maybe somewhere just right into the top of this cup area that this thing is coming out of. It hasn't formed a handle, so you might expect it maybe a high handle is what it would form, but it's acting okay. Now the one caveat about CMG is that earnings growth will start to slow down, and it's not really clear to me whether that's a problem, but I would only just go by the price volume action of the stock and see what happens here. But that is something to keep an eye on. You are going to start to see some deceleration. On the other hand, they are looking to open 100 to 150 new stores, and one of the things when I worked for Bill O'Neill, one of the ways he used to like to evaluate retail situations going forward was he always kept track of how many new stores are they going to open in the next year, and then he would try to figure out what kind of earnings they'd get from each new store, just kind of roughing it out, eyeballing it sort of, and then come up with an idea. And of course, in the end, it's always a price volume action. Everybody's asking about JDSU. Is that one up there yet? JDSU, of course, was the big gap up, and we talked about it on the Saturday after that Friday. So the Friday is the big gap up 9 trading days ago on this chart, and my cursor's on it if you can see it there, if it's gotten there, given the slowness of the system. But what was interesting is a couple of people asked us, well, why didn't you tell us earlier? That's about as early as you're going to find out, because you don't know where the intraday low is, and sometimes they can come in and they don't even form an intraday low. They just keep coming in reverse on the day. So you really can't make any assumptions until you have that intraday low really well defined. Once you do, now you have your stop. Now you can operate. So we did that over the weekend. You actually had Monday and Tuesday of last week to come into the stock just above 22, between 22 and 23. I played a little bit of this, and the other one, Finisar. Nice moves, and so when something goes up 20% in 4 or 5 days, I have a general rule. If I go in heavy on something and it's up 20% in 4 or 5 days following a gap up, I'm going to take some profits. But what some guys have been telling me, in fact, a guy used to be, or still is, an O'Neill Klein, I believe, was telling me that it's all about the stack and about all this network capacity. And so JDSU comes into view. Juniper Networks is another one. And, of course, we've seen a number of other networking companies like NetL, and, of course, Finisar has been another one. So if this thing runs up like that, and you come in hard for a couple of days, it's going to do that. And it may have to form a base or sideways consolidation, because that's one heck of a move in a very short period of time. Dr. K, would you say JDSU has topped, or how would you watch about this, or watch how this plays out from here?
Well, it certainly hasn't topped. It's just getting going. I mean, it broke out of a base, a fairly lengthy base, recently, and so this is the kind of stock that you want to hold a core position in, if not a full position, and wait for another buy point from here. It looks fantastic. It was a viable gap up. And make a comment on gap ups. If you get a gap up in a top stock in a top industry group like this one, you might want to just take an initial position at the open. In other words, maybe a half position, knowing that the stock could go a bit lower from your buy point. So you should moderate your position size accordingly. But at least that'll give you a foothold in the stock, and then if the stock goes a lot higher during the day and you completely miss it, it becomes very difficult to buy. And I can see that happening with this stock where people, it was tough to buy at the open, and then to see it close at near the peak makes it even tougher to buy, and then it just sails on higher. So at least if you buy a half position at the open, you've got your foot in the door.
Yeah, in general, my feeling is if you're a couple of days after the gap up and you're still within the range of the gap up, and I'll bring up Whole Foods market, which I think is an interesting example. You can see, let me know when this one comes up. Everybody sees it. All right, that's good. We're getting faster here. You can see the gap up 5 days ago, okay, and the stock basically hung out in the range of the gap up day, and as far as I'm concerned, you got a low here of like 58.40, I believe it is, on the gap up day, and it comes in, the volume dries up, and then today you pick up just a little bit above average, and you come up again. You're still within range of buying this stock, and you're only about 3%, less than that, about 2.7% past the intraday low of the gap up day. And my guess is you probably have some shorts on the wrong side of this one, but this could continue moving higher, and it's kind of a low risk play here, primarily because you have a very near stop at the bottom of the range. So you can't be too shy, and you can't be too worried about getting the absolute low. So we'll move to Jazz. Jazz is just hanging out. It's had a big run. It tried to come out yesterday. I believe they came out with earnings. Is that correct? Anybody want to let me know? Yes.
I think they're on the verge of coming out, according to
everybody's telling me yes, they did come out yesterday. No, they did come out yesterday. Yeah.
Well, that's a good sign. Certainly the breakout there.
So it pulls right back in. So as long as it holds the top of this base here in the 10-day moving average, which is sitting right here, about 23.25, it looks okay. It's had a nice move, though. I mean, this stock's gone up a ways, so they sell some into it. I just kind of watch. If it holds in this base, I think it's okay. If it doesn't, then if you bought it lower and you got some nice profits, or if you're just buying it in here, you probably want to protect yourself.
Actually, a correction there. Yeah, the estimate that I show, the earnings are supposed to come out on the 3rd, and they confirmed that through a corporate event announcement. So the earnings
come out yet?
No, not yet. And yesterday's move, I think, was just perhaps a classic technical breakout of the sideways consolidation. I'm looking at the news here, and I'm not really seeing anything material.
Okay. Comments on Rovi. I'd say I didn't own any of this going into the earnings, and mainly because I haven't had good luck holding stocks into earnings. I'll hold maybe a 10% position. If it comes off like Rovi did, it was only off a couple of bucks. It was only off maybe 2 to 3% this morning, so it was easy to get out of pretty quickly. But you see it's come down. The issue with Rovi is this, and it primarily has to do with their business strategy, the acquisition of Sonic. They're kind of evolving their business, and the opportunity is broad for them. At least this is what I got off of the conference call. Going forward, they have a broader opportunity, a stronger opportunity, but there's some uncertainty with respect to whether they can execute their strategy going forward. And so market doesn't like that. So what happens is it sells off, and maybe it's going to need to build a big base here. Maybe it comes down further. You notice it stopped right at the 65-day exponential moving average today. Somebody points out Rovi earnings deceleration as well. You can see in the most recent quarter it came up with 10% growth, but it is going to pick up again 20% in the next quarter. So I really think you just watch this. I wouldn't want to own it. I just watch it. I like the story. I like the concept, but it is a very fluid and very dynamic field right now with content and who's moving around, Hulu's in there. You got Amazon and you got Apple and everybody all trying to maneuver around, and how that actually plays out ultimately. You just can watch this stock and see what happens if it builds base. For now, I don't think you want to own it. So
I think the problem with Rovi today, well, yesterday after the close, it was down about 3%, but that's after the close. And then today, when it opened almost flat, and then it actually went up a little bit. And that to me was tug of war on digesting the earnings report, which certainly had a lot of strength to it in terms of projected revenues going forward, but the earnings was light. And so I just watched the price volume action during the day, and I kept the price alerts very close to where it was trading so I could monitor the movement. And when it came down to the 50, it first went through the 50-day, and then it came back up. And that, to me, made it look like the stock could pull a CMG where it comes straight back up and has a pocket pivot. but it didn't. The volume was very heavy all day and to the downside, so ultimately anyone who owned the stock should have just sold it, I'd say, halfway through the day, just because it wasn't looking right on the chart.
Yeah, so we don't like Rovi anymore. Of course, we never got married to it, so it's easy to dump it. Let's see, I'm going to go through some of these. A good question someone's asking is, Bill O'Neill talks about a rule of thinking about selling a stock when it's 70 to 100% past its 200-day moving average. I don't find that as reliable as using other selling guides. Dr. K, any comment on that?
I've never found that reliable. I would say a winning stock, hold it out to the end. In fact, I've been very bad at selling into strength. That's just my trading personality, and I think that has ended up being a good thing in the long run, because when I hit a home run in a stock, it's just because I decided not to sell it when it shoots straight up. I mean, that said, I do have some exceptional rules. If a stock moves hugely, say in a week's period, I might sell it altogether, but that's a very rare situation. There's other rare situations such as climax tops. I've analyzed climax tops going back a number of decades, and I have an algorithm that alerts me to the probability of a climax top. And so if I see one, I may not sell, though. I've seen some of these climax tops, and to me, I'm not going to sell until I see ample evidence that the stock is now finished its move. And also, it takes time for a stock to put in its top. So you'll see the price volume action play out.
Yeah. O'Neill may not use the rule himself. I never really have. If you wanted to use it, I don't think it's really well statistically studied, and so I don't know how accurate it is. I think Dr. K's rules with respect to using the 10-day and the 50-day moving average are probably more useful.
Here's one interesting study I did. If you go back to 1964 and you look at one of the big leaders, Syntex, it had what fooled a lot of the algorithms. It had a climax top halfway through its run, and I had to reconcile that with my own algorithm so that it doesn't get tripped up by a premature climax top, if you will. And what I found, though, was the beauty of the pocket pivots is that even if I had sold into that climax top thinking it's the real one, I still could have bought back into the position because it did issue a number of pocket pivots shortly after that point, meaning in the weeks after that first climax top. So I would have still been able to participate in the second and more dramatic leg of the move.
I've got Molycorp up there. I'm sure everybody can see it by now. It's been up there for a while. We pointed out in the Follow the Stock portfolio simulator, took a small position, 12.5% position in this yesterday at just above 48. On the basis of potentially the stock, if you look at a weekly chart actually of this, you go to a weekly chart of, let's make this real big so everybody can see it. Stock's actually pulling back into the 10-week moving average. So you're forming a cup with a handle here. Now, the thing here is you had real heavy downside volume last week. And, of course, there's a reason for that. They did the secondary at $50 a share, 13.5 million shares, probably more than that. So right now this stock has some supply in the market that it's going to have to absorb. I think so far this pattern is probably constructive as long as it holds the 10-week. Otherwise, it may head back for the lows around 40, and maybe it forms a double bottom, assuming it hasn't topped. But right now, Molycorp is one of those. It's a rare earth metals. They're the only producer of rare earth oxides in the Western Hemisphere, and they're slated to make $2.60 in 2012 and $4.79. That's $4.79 in 2013. So it's trading at about 10, 11 times that number in 2013. A lot of this is because of the hype in the news about it. But that's the basis for this is that last week was heavy volume without further price progress to the downside, which just tells you the stock's absorbing some selling here after the secondary offering, and it's probably going down. No, the big gap down is due to the pricing of the secondary and the fact that you had the lockup expiring. So what we would look for here is just look for a move up off the 10-week on some heavy volume. If you're trying to buy it in here, I was trying to take a little position just to illustrate how we might handle this. It's still kind of hanging out along its 20-day moving average. That's the green moving average, if you can see this big daily chart that I brought up. So no, the gap down doesn't necessarily scare me unless it's followed by some action where you break the lows of the gap down day or you go through the 50-day or the 10-day. You can see the 65-day exponential is kind of underneath here, and the stock has found support there, but you can see the 50-day is probably your best guide, the 10-week or the 50-day. But this is a riskier stock. It's going to be more volatile, and we'll see what happens here. But if the market goes higher, my guess is I would watch for this thing to pop out of here and break out. It may take more time, though. My guess is it probably will because you have a fair amount of stock to absorb. So it does kind of look like ledging when you look at it initially, but you are on top of some support over here at the bottom, right along the 48 level. And if you look at a point and figure chart, that's a pretty significant support area right now. So I kind of look for it to hold. If it starts to break down through this 10-week or 50-day moving average, then I think you got some problems, and you may be heading for the lows of January, of late January. So that's where we are on that. But we have a little position in the portfolio similar. We'll see where that goes. It's not a big deal in there. So everybody's asking about Nvidia. There's not really much to say about it other than it's just pulling back. It's under the 10-day. Dr. K, would you have sold this thing? It hasn't been following the 10-day long enough for this to be considered a violation of the 10-day, right?
Right. No, you'd be holding onto this stock. You would have bought it in January, and you'd be holding onto the stock just simply because it violated the 10-day much too soon. And also, this stock has a tendency to violate the 10-day, so you really can't use the 10-day as a guide. You should be using the 50-day. It is a leading stock. It has the criteria for one, and I believe that they reported after the close, or they must have reported. Let me just pull them up here.
Was it today after the close?
Yeah, I'm just looking at them. I think yeah, they reported, and then the stock promptly went down, and then now it's come back up close to the closing point. So there's probably going to be a bit of a tug of war on this.
Yeah, one thing I don't like about this is the earnings don't seem to me to be all that sound. A little bit shaky. You know, they're showing here minus 21%, and I'm looking at another source shows that they had 8% growth in the most recent quarter. That's not really what I want to see. I like
the revenues look pretty bad too. Actually, I was looking at okay, this is no, there's a lot of holes in the earnings and sales there.
Yeah, so it's acting okay, but I would rather be in another stock.
Yeah, there's a lot of defects to this, but it's just on the pure price action. I would have thought that the fundamentals would be better on this thing, so I would avoid it. I wouldn't have bought the actual breakout, but if someone had bought it and they're sitting on profits in this thing, I would probably be quick to take them, just because I'm not crazy about the fundamentals.
Yeah. This NXP semiconductors, people have been asking me about this one all the way up. Of course, you had a pocket pivot right here. This thing came public. It's a spin-off from Philips Electronics, and the way they made the numbers look, I don't think this data is actually correct that you're seeing here on HGS Investor. It's on an absolute basis, they increased earnings 276%, and they're looking for some pretty good numbers next quarter. Now, what's interesting is that these guys actually missed earnings by 12 cents, and they were shy on revenues. They didn't get up to, I think, 1.19 billion or something like that. And the stock started to come off, and I guess it turned around today, and you actually have a pocket pivot. So if you like this stock and you think it's going higher, this would probably be a buy point, and it's logical that you would run into some resistance on this pocket pivot and you stall a little bit as you punch up to the 28 level. So, you could buy this. It's still a risky little stock, it's a little thinner, trades about 600 to 700,000 shares a day. Not my cup of tea, really. I like something I can really sink my teeth in, which brings me back to Netflix and BIDU. People asking about NTAP. As long as we're on these techs here, NTAP is acting okay. Not really too much going on here. You notice this is almost like a classic semiconductor, huh, Dr. K? It's kind of, or a network stock where it's just back and forth.
Yeah, it's really sloppy in the way. I hate semiconductors for that reason. They're very hard to hold because they're sloppy, and I really don't like this pattern at all. I would just avoid a pattern like this altogether because it's liable to whip me out when it violates the 50-day. And this is a company that reported, and I don't think investors were real happy about the report.
How about ARM Holdings? Everybody sees ARM Holdings up there. Yep. You see that, Dr. K?
Yeah.
So it's been acting well, and nothing going on here. I think the place to be buying it was the last time would have been coming up off that gap, up off the 10-day. Now it's kind of extended. I don't really see anywhere to be buying it, but if I owned it, you want to hold it. One thing that's interesting is if you look here back in the earlier part of January, you see a big reversal right around the 22 to 24 area in the pattern. And there's a big red volume, and you see how the stock reverses like that. Now, one of the things that Bill and Neely's tell me is when you see this sort of thing, if it holds up or just slightly down, that's not necessarily a problem. A lot of people get scared out of this when they see that kind of reversal on the big, huge volume spike. But a lot of times it's just because a stock like this has really bored people for a long time. Small stock hasn't gone anywhere, and when it finally jumps up 10, 15%, I think there are some portfolio managers who start to look at it in terms of a valuation sort of situation, and they'll sell some of their stock. And of course, if you did that, then you miss this whole move up.
One of the studies I did for Bill actually was to look at high volume reversal days that occur shortly after the breakout, and we found that they're pretty irrelevant. I mean, it's tempting to want to cash in when you see a big volume reversal day, but they don't statistically bear out, and it's just this is a perfect example of that. I would only obey the reversals are good after the stock's has a nice long run. This stock, I wanted to make a couple comments. I mean, this stock fundamentally is a great player. It controls 95% of the market share of all mobile phones, smartphones, MP3 players, and so on. So the chips that it makes are really quite impressive and ubiquitous in the market. So I think there's a lot of room for growth in this company.
All right, we have Fortinet here. Everybody see Fortinet, FTNT? Some people have asked about this. I have a little bit of this. And we have this in the portfolio simulator. We bought and sold it a couple times and then bought it back and just see how this goes. I like this company. I actually think if we stay in a bull market, in a market rally, I think the stock will go higher. And as I see it, this really has just started and could go significantly higher. It tends to want to hold the 10-day, the last few, I'd say, weeks after gapping up. I believe that was on earnings, where it pulled back to the breakout point at about 34, and then you gapped up in late January, and now you've been trending higher up along the 10-day. It's acting okay. It's a little squirrely. Yesterday they were knocking it down, but it's just biding its time, and I think at some point you may wake up one morning it's going to be up a couple of bucks. I do think there is potential, however, for it to pull back down underneath 39, maybe 38, 39. If the market were to pull back and correct, which it could do at any point, it could just suddenly have a couple of days where it pulls back, and the market would certainly be entitled to that, I think, given how fast it's run up since basically since the end of the beginning of the year.
Yeah, it's a pretty sloppy pattern relative to the 10-day. If you look back to August when it broke out, and so you can't really use the 10-day as a sell guide. And if you had, for those who bought it, way back in August, you'd still be sitting on the position because it never violates the 50-day. It always gets support. And this is a stock where you could have bought, from the looks of things, at least 3 times. I'd say 4 times. So you would have a fairly sizable position. This would probably represent 100% of your account out of a possible 200% on margin. But your average cost on the stock, if you bought it, way back in August, and then again in October, then again in December on the breakout, and again in January, your average cost will probably be about 30 or 28 or something like that. So you'd be sitting on a nice profit, and you could afford to sit on a big position, 50 to 100% of your portfolio with that kind of profit.
I've got Rax up now. Rax is acting fine. There's really nothing here to talk about. And people ask me what are my thoughts on Rax. It's acting okay. There's really nothing wrong here. A little pullback here. It looks fine. I'm going to look at some more text here. CRM. The thing with CRM is this could just be a big double bottom. Does everybody see the chart up there? Okay, good. We're getting fast here. That's good. But as you undercut and see, you come on top of this this whole structure here from before, and you just basically pull down on top of it. Everybody see those trend lines I drew? And you can see you came down on top of the prior base, and you come up, and it's trying to come up. Earnings come out, I think, in the next, couple of weeks or so, and you'll see what happens when earnings come out. Maybe it pulls an F5 and blows to the downside, but for now, this thing, I think a lot of people see this as a short sale in here, and they want to get shorted, and I actually did trade this real quick for a 3-day break to the downside and got a few points out of it, but nothing really that exciting. And it's too early to short. You can't just turn around and short. I know someone's asking me if I was still short ACAM. No, I actually never did short it. I did talk about it, though, a couple of weeks ago. The way it was acting was pretty weak. And you can see, hopefully you can see the chart now up there on ACAM. But you get a break and you get a dead cat bounce. It probably will test the low on a tactical basis if you really like to do this kind of short-term stuff, which Dr. K will scold you if you do. You could try and short it here, but it could always head back up to the 200-day, and you're not in a bear market, okay? So I see people try to short, and I admit I'll hit something for a few points, just on the side to kind of keep my psychology even if I'm trying to hold some longs. And really, it doesn't accomplish anything other than to help me hold on to things that otherwise I might just toss if I wasn't short a couple things. It's like having a security blanket, at least for me. So yes, I know I'm weak in that way, but sometimes I'll do that. But I do find that in general, though, shorting when you're still in an uptrend is just not going to work. One stock I like a lot here is Radware. I like the story here. I've liked this one for a while. And of course, you had that first gap up way back at the beginning of December on the news that HP was looking at them. There's even talk that F5 was looking at them. They do supposedly compete with F5. It's basically a traffic cop for networks. They kind of direct traffic and make sure that the network's being used efficiently. And that they're positioned a little bit differently than F5 and Cisco Systems. So they're a smaller company. They got great earnings growth in the most recent quarters. The estimate next quarter isn't so hot, but after that it starts to pick up again. Well-run Israeli company. You could look at this whole pattern extending from mid-September to now as kind of a base on base. Some people want to look at it as a big cup with a handle, and I guess you could. Look at it that way. I kind of look at it as kind of a hybrid between a cup and with a handle. You can see the cup starts in early September and goes to early December when it comes up on the gap up, and then you form this handle. But as Dr. K will tell you, you don't really need to focus on the exact shape or label that you want to give to the chart. It doesn't have to look like a cup with a handle or a zebra or the Milky Way or whatever. If you can discern that you've got some constructive action in the chart, then that's what you can go with. In this case, this does have a lot of look of a stock that's just kind of stair-stepping. Now, I would point out, though, that if this is a base on base, I would like to see this pattern optimally form during a correction because it's telling you it's a stock that is wanting to go up, but it can't because of the market. Now, we've been in a strong rally since the beginning of the year, and we've actually been in a pretty strong rally since early September. And this stock has really just not been able to go anywhere. So that may be telling you it's not as powerful as the base on base might be if it had formed during a correction instead of a market uptrend. So that's something to think about. Market context is everything. And in this case, maybe, this isn't...
the patterns that Bill O'Neill talks about, or that a lot of people talk about, cup and handle and saucer and all of that, they're good training wheels. I call them training wheels, so you can get accustomed to what you're looking for. But at the end of the day, it really comes down to market context. How did that stock trade compared to the general averages? That's really what's important. And that's why you have examples in the past that didn't look like cup with handles, that actually looked defective, yet relative to the overall market, they were incredibly powerful patterns. And so that's what I encourage everyone to look at, literally thousands upon thousands of charts, so you condition yourself to seeing how a good stock trades relative to market conditions.
Quick comments on Google. Some people tell me Google is a stealth cloud play. I suppose it is. What you're seeing here is a big, giant cup with a handle with a little cup with handle forming the handle. And that also is a big cup and handle within a big pattern going all the way back to January of '08, I believe it is, yes. And it's trying to come out of here, but the volume figures on the weekly don't look so hot. And it's just kind of slow, but it's moving up along with the market. Not necessarily my favorite stock to be long. You know, I'm looking for something more high octane. I'll take JDSU. Going through a lot of these. This one, the thin little stock, it's acting okay. Maybe there's a pocket pivot coming out of there somewhere, but I know this ON semiconductor, too small for me. LVS, real quick. It's not getting any upside volume as it's trying to rise the last few days. It's stalling. It's in a long base, though, and it may try to come out of here. The action that occurred back here in early November, that's very climax top-like, and it was climactic, at least in the short term, but it may not necessarily be what you would call, I guess, a major climax top that's really signaling the end of the run for this stock. Its cousin stock is Win, and Win had a huge breakout last Thursday, or actually last Friday, and it's tracking very tightly with volume drying up. I would prefer Win over LVS. NOG is an interesting little gas play, but, you know, again, this is a small stock, and I saw this the other day. I think it was on Friday where you had a pocket pivot breakout. And I saw this, and I looked at it, but it's a thin little stock. It's an oil stock. It's moving with all the other oils. I wasn't that excited about it. And of course, you can see it comes right back in. So it's right back to where it was last Friday. So if you like it, I guess you can buy it. But I'd rather be long something like a Baker Hughes if I'm going to be in oils or energy like this, oil, gas, oil services, oil drillers, you name it. Oil services doing well. Baker Hughes had a pocket pivot today coming out of a 3 weeks tight pattern. Also Halliburton went to new highs today, and it had also broken out a while ago. I think I talked about this in our first webinar, which was a couple of weeks ago. But these are acting okay. So you had your chance to buy them on the pullbacks. You had the breakouts. Today you have a pocket pivot on BHI, and that's viable again, coming out of there. Let's see. Somebody asking about open table, ascending base. You know what? I'll make a point about ascending bases in a bull market, in a bull trend or a market rally, a strongly trending market. You don't have ascending bases. What you think is an ascending base is not an ascending base, because the essence of an ascending base is that it forms during a market correction or a bear market, generally a market correction, short term to intermediate. So, you know, people, once they're shown an ascending base, they see it everywhere. But really, an ascending base is an odd pattern within the market context of a correction, because the stock is trying to go higher during a correction will form an ascending base, and it'll stick out like a sore thumb when you're going through all your charts. When you're looking at stocks in a bull market, everything can look like an ascending base. So things aren't really distinguished in that manner. So again, market context on ascending bases is what makes them ascending bases. Okay, so that's really what you want to pay attention to. I'm going to jump back to the energies. Coal has been doing well, so Peabody Energy has been one of the better acting coals. You had a breakout 3 days ago. That's actually in a viable position. Walter Industries came out, or Walter Energy rather, had a pocket pivot 3 days ago. They came out with earnings day before yesterday, and they missed by a pretty good margin. But the growth numbers are still huge, so this thing is still trying to form a base. It could potentially go higher. I'm kind of watching it here. I liked also the action in ACI, Arch Coal, which came out with earnings as well, and they've got some big numbers going forward. I really like this number 2 quarters out, 63 cents. But you see you have a pocket pivot here 3 days ago as it comes up through the 50-day moving average, and now you've pulled back on lighter volume over the past 2 days. So if you like this stock, this is probably a place to buy it on this little pullback. You know, there's also this little dinky coal stock. I don't like this one. And, of course, there's the Chinese coal company, which I don't really care for either. I tend to like WLT, ACI, and BTU. Real quick, let's go look at Lulu. Lulu's up there, looking good. So, I don't know. What do you want me to tell you? That it's going another 80 points higher? I don't know. But all I know right now is it's hanging in there very nicely, holding above the 10-day moving average, although it doesn't tend to hold it. We flagged it when it came out on the pocket pivots. Now, notice the gap up move that occurred towards the beginning part of January, that didn't work. The thing came in, and a lot of times you have a gap up like that, and it runs into some resistance there. When they clear the base and they actually break out or break away from the base, that's probably better to see. So when this thing finally comes out here, it has a nice move.
And what's nice about the sell rule on the gap up is that it doesn't. I mean, if you were to utilize the sell rules that we advocate, in other words, it breaks below the low of that gap up day, you're out of position. You know, you might give it 1 or 2% porosity, in other words, to trade under the low of that gap up day, but you're still, you know, you might have taken a 3 or 4% hit at most to buying on the gap up, and then you just turn right around and buy it on February 1st when it has a pocket pivot out of a very constructive price volume action leading up to that pocket pivot.
You notice Wabco Holdings, we flagged the pocket pivot gap on last Friday, and you can see it gapped down. This is a little bit different from Lulu. You had a huge amount of volume on this one, and it had shaken out along the 50-day and the 65-day exponential moving average. You can see that here along the lows of this last little pullback. And when it came out, it actually cleared out on Monday, and it's holding very tight with the volume drying up. Looks like it wants to go higher. So I'm noticing the futures right now are down a little bit. I don't know if we pull back tomorrow, but maybe this could pull back into 63. But it's acting very well. I like this stock a lot, actually. Somebody asking about Citrix. Citrix, negative earnings growth. On that basis, I don't really care for it, but it broke out, and it's within range of the breakout point, which is about 70, 71. So it's sitting here underneath 73. I think can probably be bought if you like it. It's within range using your usual 7 to 8% stop. ARUN had a pocket pivot in here off the 10-day 4 days ago. Everybody see the chart? ARUN, are we coming in real fast here?
Yeah, I think GoToWebinar probably had some server issue when we started.
Could have been, yeah. Good timing on their part. I just thought it was your cheap Beverly Hills internet service.
That was the other option.
But so this is acting fine. Aruba's kind of breaking out its trend, but you know it's straight down and straight up, and that's kind of how this market has been. Somebody's asking us about Dell. Dell, I don't know. Is that a buyable gap up, Dr. K? Would you buy that?
I wouldn't, just simply because it's a slower moving stock. I'm not. You know, Dell had its day, and I don't see this stock as being a ripping stock to the upside. It's sort of like what IBM once upon a time and Microsoft once upon a time were really fast-moving stocks, and then once they get too big, you know, once they get very mature, that's it. They become slow, stodgy names, and I expect Dell is not going to be any different.
I like RIM better, mainly because RIM today, Bible kind of gap up here, nice move, breakout. I'm thinking about buying this maybe tomorrow, using the low of today as a stop. So they still have strong earnings. I have a BlackBerry. I'm looking at iPhones through Verizon, but not very attractive. And the guys who are selling them will kind of nudge you in the side and say, you know, really, the iPhone isn't that hot. The 4G network isn't all that hot just yet. And so we like sticking with the BlackBerry probably. So I think a lot of people won't necessarily switch from BlackBerries or RIM products to other phones, especially if you're used to them. I know everything I have works on mine, so probably when I get a new phone, that's what I'll do. But you have a pocket pivot type move. Yes, Dr. K, you said something?
Yeah, would you say that's true in your observations about RIM versus the iPhone? Would you say that's true in California or across the U.S.? Because in Europe, people have abandoned their RIMs for the iPhone works great in Europe just simply because it's hooked up to a good network. The problem with California is that the iPhone has not been married to a proper network, so you get terrible coverage. Now, the Android is a valid competitor to the iPhone, and the way I see it is the Android is probably, in the long run, better than the iPhone, and the iPhone is certainly better than the BlackBerry.
Right. Well, when somebody comments, BlackBerry is much better, stick with it. Thank you, Ryan. I probably will.
And there are a lot of very, very loyal whole owners of BlackBerries and iPhones, almost to a point of rabidity.
2 weeks down and 2 weeks up on this. Is this a sell signal on Riverbed? Do you see the weekly chart here, Dr. K?
I see that.
Everybody's looking at 2 weeks down. But see, you notice something here when it pulls down.
That was you had the support there at mid-bar close.
Yeah, so I don't see that as 2 weeks down. Usually if you go down 2 weeks, it's a hard close near the lows for the week, and then you turn around and you go right back up. And it's all on very heavy volume. To me, what you have here is really two supporting weeks as the stock pulls down. I know that somebody was asking me about what I think about IBD's call that it's the third time off the 50-day moving average, and that that might be a time to sell it. Dr. K, does that wash with your studies?
I don't like those types of projections because I don't see a lot of statistical validity. I mean, there are cases where that indeed does work, but there's too many cases where it doesn't, and you might end up leaving a lot of good money on the table as a result. And also, I'd point out that Riverbed, the reason it has this pattern is because F5 reported on January 20th, which caused all cloud stocks to rupture, and so it shook a lot of holders out of the stock. But then Riverbed reported, and I guess it was a good report, and now the stock is moving to new highs.
Moving highs, and so what you want to have to consider this is market context again comes into play. So the market context of those 2 weeks down that you see in Riverbed were caused by F5 just blowing to pieces, and so that took all the clouds down. But what does Riverbed do as F5 is getting clocked? It's actually finding mid-bar support, or it's finding support at the lows and then pushing up by the end of the week to close well in the upper half of the second down week. So it's 7 o'clock right now. I'm going to go for 10 minutes more. Are you okay with that, Dr. K?
Absolutely.
Because we kind of have had a few glitches and we've been, the slow charts and whatnot. So we'll go for another 10 minutes and try to cover as much as we can. We talked about ARUN was that 2 weeks down and 2 weeks up. That might be more similar to it, but the thing is, usually that occurs after a long price run, okay, and several months of a price run. When you see that, it's usually a top. It hasn't really had a long price run. You can see from this weekly chart that I have up here, and we'll take it down. It's not so far gone that this would be a valid signal. Usually, right, Dr. K, what did your studies show about 2 weeks down and 2 weeks up?
All these little patterns and things, they add a lot of confusion in terms of the way I see charts. I'd really like to keep things simple, and that means price volume action on daily and weekly charts. And as far as 2 weeks down, 2 weeks up, there's too many cases where it doesn't work. So I prefer to just take that in context with the overall chart and against the general market.
Yeah.
And that leads me to my conclusions.
JSO here, solar stock, nothing happening here. Cheap stock had a little pocket pivot coming up to the 50-day like 4 days ago, 5 days ago, I guess. No, 4 days ago. Too cheap. If you like cheap solars, maybe try this one. I don't know, but doesn't really thrill me. JKS may be acting a little better. It's a cup with a handle type formation. The handle's a little bit on the low side. Not really happening for me, so I'm not really into it. I'm going to take a look at DEC. DEC's moved up, it's formed a cup, now you're pulling back down. Volume is drying up the last couple of days. In fact, today the volume dried up, stock pulled back to the 10-day. It doesn't follow the 10-day, so that's not really relevant. But it may just form a handle here. So it's acting okay, not giving any sell signals yet. First Solar is probably, getting back to the solars, has been one of the stronger ones, but you also have to look at First Solar within the context of its overall pattern, which is this big, ugly thing. So it's really trying to come out of this long-term pattern, and maybe it's formed some lows in here. But I don't know. I'm not really that excited about it.
Yeah, the fundamentals and the technicals aren't real impressive on that one.
Right. Oops, let's see. That's wrong. GMCR. I heard they're going to partner up with Juan Valdez. Or is that Starbucks? I forget. Anyways, nobody remembers Juan Valdez, the guy they used to have in the commercials. I think, was it Folders, Rich Mountain Grown Coffee or something? I was always offended by that because does everybody think Hispanics have donkeys? I mean, I actually have a couple of burros myself, but do all Hispanics travel around in donkeys or burros? I don't know. I mean, we all wear serapes, right, I guess. But anyways, Green Mountain Coffees. This one, this was a viable gap up actually. Now here's the situation here where you think it's going to fail because the day of the viable gap up, which was what, 10 days ago? Is that right? Yeah, about 10 days ago. It closes near the low, so that scares you. But a lot of this is probably short covering. This has got to be the ugliest looking pattern I've ever seen. But the thing is working. So, that's the drill on this one. It's acting well. Pull back to the 10-day. I don't know if I'm going to play here. It's already, I wish I had bought the gap up here, but that was still a little bit funky. And this whole pattern is just ugly as well.
Yeah, if you look at past price action, you should always look at past price action of a stock to give you a clue on how it might trade in the future. Now, I mean, this one worked, but I would not have bought the gap up at all. It's just because of what the stock's done in the past. Too many gap ups and gap downs. It's too much risk introduced into the trade.
Right, and somebody says here, SAC Capital thinks the deal is with Starbucks. They're the ones probably with inside information, so that's probably true. So somebody was joking. Now we all know what Stevie Cohen's edge is, inside information. I think they got 2 former portfolio managers being investigated or were arrested or whatever. Unfortunately, we don't have any of that kind of stuff. Nobody ever wants to give us any information, so we're stuck looking at charts all day long. CMI, people are asking me about Cummins engine. It's a slow stock, and it's come up off the 50-day, and it's just hanging out. Today you had volume pick up just a little bit, and it pulls down. But, it could go sideways between here and 110. Could even pull down a little lower than that, possibly. But it's a slow stock, and it'll probably keep going. The other ones that seem to be better are CAT. And notice CAT's gotten through the 100 level, so it could head for 110 in a hurry. And Deere, you had a little pocket pivot type move, a continuation pocket pivot today, but it stalled a little bit. Huge volume. So not sure where that one's going from here. We already talked about Lulu. Somebody asking about Borg Warner. That's probably, looks interesting, but straight up, can't do anything with it now. Nice earnings. Another one of these just kind of industrial stocks. If we look at the fertilizers, pot is acting okay. Had a nice move. We had a pocket pivot, I believe, off the 10-day a few days ago, about 5 days ago. Went up, came back down. AGU, similar type of gap up here and broke out, pulling back to the 10-day. These might be viable right here. So the other one, MOS, similar sort of action. They're very volatile, though. So in general, though, you look at Monsanto's another one, and I think they had earnings yesterday. The ags are doing okay. Moo is acting okay. That's the Market Vectors Agribiz ETF, and that's doing okay. Somebody's asking about iSurge. iSurge, a big gap up. Dr. K, is that a viable gap up, or is that not really what you want to see?
Well, the relative strength was really weak on that gap up. I don't like that kind of stock because I just don't see a whole lot of upside in this kind of pattern. And after the gap up, it really hasn't gone anywhere. It's pretty much trading sideways. I would wait for this general base, this big basin pattern to play out, and then decide if I wanted to take a position in it.
CF's another fertilizer. They're all looking kind of the same. So somebody's asking about the FAS. We actually, interestingly, Dr. K, weren't we like last week saying you could buy this thing? Yeah,
with all the financials have been looking pretty good.
It's moved up about 8% or so since then, but it looks okay. Financials have been looking good. I think that's mostly JPM, and JPM's been moving, so that's propelling the FAS. Bank of America hanging in there. Wells Fargo, I'm not that thrilled about, but it's mostly JPM. I think Goldman Sachs might be in there as well, and Goldie's been moving up. But I think it's mostly JPM makes up that ETF. Someone asked about IDCC. It's just up there, and it's way up there, and I'd look for it to have some sort of pullback consolidation. We're getting ready to wrap up here. I'm just looking at some of these symbols come off. Micrel is a cheap semiconductor moving with the rest. It's okay. I wish it was a $20 or $30 stock. I'd be more interested in it. Priceline is coming out with earnings soon, I believe, and it already broke out, so it's up a little bit. Not necessarily sure I would hold it into earnings. I don't know. I haven't really held anything into earnings. Have you, Dr. K?
I have. It depends. If the stock prior to the earnings report is showing a lot of constructive activity, and what I love to see is a pocket pivot the day before earnings are reported, then I may very well take a position. And knowing that, some of these things will not play out. The stock might gap down 5%, 10%, or more. So, if you're going to play right before earnings, you might want to mitigate the size of your position to something like a half.
Yeah. I hope somebody owns CLF because they came out with earnings today and they're gapped up to 102. That's where they closed up by the end of after-hours trading. So this might be a viable gap, but you're in an extended position. You're not coming out of a big consolidation or anything. You're already in an uptrend, so you're going to gap up tomorrow. Is that going to go higher? That's not really optimal, is it, Dr. K? This thing's going to open up around 102, it looks like, tomorrow. What's your take on that? Would you buy that?
That's a good question here. I'd have to look at it in a little more detail. I mean, it is a nice, it is a commodity stock that I have liked, and the thing is, a lot of these commodities trade pretty sloppy. So, in other words, on a gap up in a commodity stock, it could very well undercut that low and take you out of the position. So, I'd be a little careful with this one in terms of buying just on the gap up. I'd be more comfortable buying some of these commodities on weakness off a 50-day moving average, pocket pivoting off a 50-day.
Somebody owns it. All right, Peter. At least that makes my day. At least someone's going to make some money tomorrow. Hopefully it doesn't do something weird like CMG did. But Illumina is another one people are asking us about. You had a pocket pivot 4 days ago. It's pulled back to the 10-day moving average. That makes sense. If you look at the move up through that pocket pivot and you run up above close to 74 approximately, and you pull back into the 10-day moving average, not that it tends to act all that well along the 10-day moving average. I'm picking up a couple of small violations in there. But it's okay as long as it holds this level, which it should. I was actually looking for it to move up a little more sharply here. It has been a big leader. Genetic sequencing, I guess that's what they help out with. Their products do, and they've been on the cutting edge and coming out with a lot of good new stuff. So speaking of CLF, what do we think of Vale? I hate this stock, and mainly I hate the stock because it acts a lot like CLF. It's very choppy, although CLF has a better uptrend. Vale, and are those going back and forth? You guys see those charts okay? Everybody looking at Vale now? Yeah, okay. And you can see it's the same thing. You go up and you come back down. You go up and you come back down. You go up, you come back down. That kind of stuff will drive you nuts, which means when they announce earnings, they'll probably gap up 10 points. But it's just kind of hanging out, and it just moves up and comes in, and it's kind of a frustrating stock to buy, and there are no pocket pivots in it. So it is their nature. These stuff stocks are like that. You can look at the UIM, which is a little bit like that. They have these corrections every once in a while. We wrote an article down here when the UIM was coming up to 40 for a magazine, and they think we're geniuses now, and they want us to go back and write more stuff for them, but I'm not so sure we can come up with something like this again. It's done pretty well. The UIM, which is the basic materials ETF. So someone was mentioning they get frustrated by Rio. Why necessarily be frustrated by it? If it breaks out and it runs up, half of all stocks will break out and then pull back to their breakout point. So that seems to be what it's doing here. So my guess would be that it's going to try and go higher, and if you're patient with it, you'll probably end up okay. But yeah, it's the same sort of situation where they're pretty choppy and they're very frustrating. So that's pretty much it for now. It's 7:12. We got a little bit over. It's hard to get through everything that we want to get through, so you just have to stay tuned for the next one. We'll see what happens with the market, but you're in an uptrend right now, so keep your trailing stops in mind and understand that we could have a pullback for 2 or 3 days. That could happen at any point in here, and as long as the market holds within the relevant parameters, and I would say as long as Dr. K's model, the market direction model, doesn't issue a sell signal, then I think you can kind of lean on the long side. That said, you don't want to come in and start shorting if you start to break off the peak. You can see what that would have done to you if you were trying to do that earlier, either in back in November and other periods where you pulled back more recently. And that's pretty much it. So thanks for showing up today, you guys. Thanks for putting up with the slow charts at the outset. We're glad we got it straightened out, and we look forward to seeing you guys again. So good night.